we turned quite bullish on China on 14th of November last year, which reversed 2 years of prior caution. And the reasons are pretty simple. On a Thursday, China reversed its COVID policy. On a Friday, they reversed their property tightening policy. And on the weekend in Bali, they got very friendly with the G20. And now they're getting friendlier to the corporate sector. So a lot of the things that were bothering me were reversed over a 4-day period. Yeah. And so the facts changed, and I changed my mind. And so I'm still quite constructive, as are my colleagues Winnie Wu and Helen Chow.
Yeah. 4 seasons of loneliness. You call it the 5 vectors of China uncertainty. We have a graphic of that. That's about to come up. So when you look at the 5, we've obviously come off. We pulled back from the edge from these 5 things. What do you think is the last to go?
No, I think they're all good now. So I talked about COVID, river properties. The property is better. Regulation is better. Just in the last few weeks, we've heard better news on the tech sector. Things are getting better. Geopolitics I talked about. I think if you just look at the changes, the mood music, the tone with the U.S., with Australia, with Europe, I think it's a lot better. And on the monetary side, I think things are already picking up. The credit impulse, your own Bloomberg credit impulse is picking up.
There we go.
So I think, it's 5 for 5 now. So I feel that, I was talking to clients the last few days, and they were asking me, well, when are we going to sell this? And I said, well, you're very impatient. It's just gotten started 2 months ago. So either we wait for it to get very expensive, which is quite far, or there's a turn in policy again, which I think is also quite far.
How does this dovetail then into the broader EM complex?
I think it's very positive. China is between 30 to 40% of the EM index, depending on when you measure it. And as we know, a lot of the North Asian EMs, so Korea and Taiwan, are highly linked to the Chinese economic cycle, and as are the Latin Americans. So I think it's pretty good for the entire EM complex.
Sectors, top of mind for you?
Yeah, it's, our portfolio last year was all very defensive and boring. That's the way to survive a bear market. But we changed our minds at the end of last year because of what's happening in China. So our big call is to buy cyclicals, any kind that you can find, whether it's in the material sector or the energy sector or the industrial sector or consumer cyclicals or even in the technology cyclicals, anything that is correlated. In fact, what we did when we picked stocks was we looked at the correlation of stocks with the Bloomberg Credit Impulse Index. And the guys with the highest correlation are the ones that we are recommending.
And Ajay, you mentioned the China reopening story certainly is a sort of a green shoot. I'm wondering, the Fed downshift as well. How confident are you that this is really something that's been, priced in? Is deflation being priced in right now? And when do you expect EM central banks to start cutting rates this year?
Well, I think it's very hard. As you know, the EM central banks began to raise rates well before the Fed, so in 2021. So most of them are at the end of their rate hike cycle. Most of them are probably done. But I think for rate cuts to happen, I think that's probably a bridge too far. I think they'll need to wait for the Fed to be done and or start cutting. Otherwise, while the currencies have been pretty resilient in the last 6 months or so, I think it might affect their currencies. And so there's really no point to be a hero right now. I think they have done a great job containing their inflation issues very, preemptively, way ahead of the Fed. So no, I'm not looking for rate cuts in EMs right now. I think it's a little bit too early. But I think the general tone is quite positive, because when the Fed stops hiking rates in the next 1 year, Asian equities are up about 15%, with the exception of 82 when we had an EM debt crisis and the TMT bust.
Maybe you could bring us your latest when it comes to your EM scorecard. It seems like China, you're constructive. What other markets are you most excited about this year?
Yeah, so we also like Korea for the same reason that we like China. The cycle's picking up, and hopefully the semiconductor over inventory cycle will also probably taper out by the middle of this year. I also like Japan. I think the currency was exceptionally undervalued. I think the equity market is also very undervalued. There's quite a bit of M&A going on. And if the global economy begins to bottom out by the middle of this year, and if China picks up, that also begins to help Japan. And they also have a pretty powerful technology equipment sector, which I like. So those are the ones that I like. I also have a favorable view on Chile and Indonesia to play the commodity story. And then we're generally less bullish on the winners of last year, which was mainly some of the ASEAN countries in South Asia.
Yet talk a little bit more Indonesia, because Indonesia did very well last year, and you're still constructive.
Yeah,
on
well,
that,
I mean,
though.
you were at the beginning of the program, you were talking about just how commodities are picking up,
Yeah.
and they're quite linked to the commodity cycle, and I think to the tourism cycle, so they will benefit there, and we think the valuations are also reasonable.